Hi, welcome to this video today, which is all about a key skill for Forex trading success. Now, the interesting thing about this skill is most traders won't even think it is a skill. They think they've got it already. So what is it? Basically, it's avoiding the psychological traps of inattention awareness, where you don't see obvious things, okay? And also being totally objective and taking all the information you need in and processing it in the right way. Now, most people think, when they're trading the markets, they are putting effort in, they're making decisions, and they think that they are, basically looking at everything they need to and drawing the right conclusions. Nothing could be further from the truth. And in terms of this, just want to discuss Ray Dalio, the world's top hedge fund manager, interviewed in the book Superminds, is a book edited by a guy called Rosenthal. And Rosenthal said, what is the key to your success? And Dalio said, well, actually it's meditation, because it helps me see the reality, it helps me see things objectively and respond in the right way. Now, this video is not about meditation. It's about achieving or aspiring to achieve the mindset that Ray Dalio has got. The mindset can be achieved in different ways, but what you need to keep in mind is, as humans, all right, we do not see reality. It's a subjective reality. For example, when you look at something, your eye is not a video camera, okay? Comes into your brain will process that information in a certain way, and very often it'll create an illusion. Okay, and I'm just going to go through this as we move through the video. But first of all, I want to just talk about inattention awareness and how easy it is to miss obvious things. I mean, how often, for example, have you done a trade? You look at the trade afterwards and you think, I knew that was going to happen, but you were the other way around. I've done it. I'm sure most traders have done it. Right. Now, just going to go through inattention awareness first, then we're going to come back and discuss in a little more detail. I'm just going to illustrate it with a story. Well, it's actually a factual story about a US nuclear submarine where the captain made a fatal error. And you're probably thinking, how on earth could he make the error? If you think that, just take a little test I've given after the story about the submarine and see if you get it right. Okay, we'll be back in just a few moments. Here we go, just quickly to the storyboard.
This is an awareness test. How many passes does the team in white make?
Go!
The answer is 13. But did you see the moonwalking bear?
Go!
Welcome back. So did you see the moonwalking bear? About 70% of people statistically do not see the bear. Okay, that test, actually, that's from a Transport for London ad about, looking out for cyclists. But the original test was done by Nobel Prize winner, I think, Chris Chabray. And he wrote a fantastic book called The Invisible Gorilla. It's all about how we just miss so many things if we're not correctly focused, and how we create illusions as well. Now, if you take that nuclear submarine accident, the reason, obviously, the guy didn't see the fishing vessel was because he didn't expect to. He's done that so many times. And, what are the chances of a boat being above his submarine? Almost minimal. So he saw what he wanted to see. I think the US Navy spent several £million in investigating that accident and still didn't draw the right conclusion. Now what I want to do is go through some key points which basically will keep us away from illusions that we can create in our minds, and also keep a high state of awareness and attention at all times. Let's go through the key points. Okay, what we're going to do now is just look at staying focused on the reality at all times, okay? And also not falling for illusions that can cause us to lose money. And I'm basically done a little checklist here. I've done it both from the perspective of technical analysis and from fundamental analysis. Let's start with technical analysis. Point number one, your mother's face, Forex trading and an illusion. And, in terms of why I put your mother's face is just to emphasize how we seek patterns, okay? Now, the first person you really become normally familiar with is going to be your mother, okay? You pattern match her face. It isn't something you consciously do. You just see the pattern, goes into your subconscious even. It's your mother, okay? So if you think about the human brain, even generally, it's designed to seek patterns. Now, that's a good thing and a bad thing. It can be a very bad thing in Forex trading because a lot of technical analysis is just simply an illusion. You see it in hindsight. It's got nothing to do with the reality right now. And I'll come to point number two, which is the Curtis Faith plate glass test. And he mentions it in the book, I think it's Trading Instincts, where he had a friend who was a trader. And to illustrate, you should keep your technical analysis simple. He had a glass plate covered in lines, straight and diagonal lines, and he would drop it on charts. And you'd always see some chart formation that was valid when that was done. But of course, it's only valid because there are so many lines. You're bound to probably see a chart formation. I'm sure regular viewers know. My pet hate in Forex trading is when you see people just drawing so many lines on a chart when they do their analysis, showing stuff that worked in hindsight, which obviously isn't going to work forward. They end up with a chart that just basically looks like it's got the London Tube map superimposed upon it. Not too many lines on a chart. You've got to keep your Forex analysis simple, okay? Now, the hindsight illusion, obviously with Curtis Faith plate glass test, it's there, but it's also there with people who do simple chart analysis. I'll give you a perfect example. Someone sent me a chart the other day of a channel going upwards. It's over 2 years, okay? And the price is coming into the bottom of the channel, and he's saying, is it a good idea to buy? Now, in terms of the price, from the support line when it starts to where he wants to buy, it's moved 30%. Okay, it's got no relevance at all, has it? Yeah, traders aren't focused on that price a couple of years ago, which brings the upsloping trend line, or starts the upsloping trend line. They're focused on what's going on right now. It's just an illusion, okay? It's a hindsight thing, okay? So in terms of diagonal lines, in my view, you've got to be very careful when you use them. I like to use them in relatively short time frames, or just to show trajectory, you know, how the price is moving in terms of speed. I'll always try and line it up with a straight line. Now, in terms of point number 4, focus on updating and lessons from P.T. Jones, Paul Tudor Jones, actually. Now, in terms of a lot of traders, they put their trades on and just leave them, okay? That's not a good idea, okay? What you want to do is update every day. Is your trade still a good one, okay? A lot of traders, this is where their eye goes off the ball. Let's say they've got quite a bit of profit, okay? And they're looking for more, obviously, but the chart has subtly changed, okay? It's becoming a chart formation that's against their position. They lose a little bit of money back, but they've got so much profit anyway, they're just not focused enough, okay? The lesson from Paul Tudor Jones is, obviously, you need to update your view of the chart. Paul Tudor Jones, I think it's a fantastic lesson for any Forex trader, said, when I update my positions, it doesn't matter how much profit I've made over days or weeks. I look at the chart and I say, am I happy with that position if I put it on the day before? That is a fantastic way to keep yourself focused, in my view. Right, moving to fundamental analysis, the media, illusion and reality. We all know all those wise experts on the newswire channels. They can explain everything, and they explain it all in hindsight, of course. That's easy. Obviously, also the media, they like stories, okay? Yeah, the more a price rises, the more bullish they get, the more it falls, the more bearish they get. And they start to anticipate events that are probably not going to happen. What you've got to do is be very aware of this, and how the media actually gives a distorted view of a lot of subjects they cover. I've mentioned it in previous videos. Obviously, yeah, when you watch the majority of stock analysts interviewed, well, they've got vested interest in stocks going up. I've also mentioned the illusion in oil that there is a shortage of supply. There's no shortage of supply, but hedge funds make a lot of money, punting around in it or trading in it. So they want to basically present a story. And I'm sure a lot of these banks and broker experts that come on the channels, they basically want to tell stories that support their own positions, okay? What you've got to do, I'm going to come to point number 2, is learn from Bruce Kovner, Michael Steinhardt and Ray Dalio. I focused on Ray Dalio today, but Michael Steinhardt and Bruce Kovner do the same as he does. They look at the media, okay? They look at what's going on, and they basically work out a different view, okay? Bruce Kovner said one of the reasons for his success is he works out an alternative scenario and really believes it. Michael Steinhardt called doing this variant perception. You've got a variant perception to the majority. Ray Dalio does the same. You can train yourself, okay, to think differently, okay? Also, when you're reading the media, get good media. There is good media out there which can really help you see the reality. I mentioned it in a previous video. A hedge fund manager called Leitner. I can't remember his first name now. But he said he could make money just reading The Economist, which is an English publication. It is superb. It's objective. It's written by people who know what they're talking about. They've got no vested interest. If you're a fundamental trader, go and read The Economist. There's other really good sources as well, if you look around. But your Reuters, your Bloomberg, your CNBC, very often that is just reflecting the herd instinct. Point number 3, the market price is the wrong price. Always keep this in mind. I've taken that quote there from George Soros. What he says is the market price is the wrong price because traders respond to their emotions. The herd instinct comes into play. Prices get pushed too far to the upside or downside, and your opportunity for profit is to come in against the herd at the right time. Okay? So you've got to focus on that. If you want to be a successful Forex trader, you've got to be very contrary. You've got to do things that other traders don't do. And if you're analysing fundamentals and news and so forth, you really do have to basically be very focused and have a high level of attention. Point number 4, remember there are two sides to a story. A lot of traders, what they do is they put a trade on and they look for reasons to keep the trade. They want confirming evidence. In psychological terms, it's called confirmation bias, okay? They don't look for the other side of the story and what can go wrong. And you have to do this. Jim Leitner, that was his first name. He said that the hardest thing to do in trading is to train yourself to look at the other side of the argument. There's always two sides to an argument. There isn't just one. You don't want to focus on your argument. You need to run the counter argument. I normally do it just with pen and paper, just put for, against, and try and really think about it and see if I can get the right conclusion to keep my trade, or if it's the wrong conclusion, I will have to get out my trade. So I think it's very underestimated by Forex traders, the level of attention that you need, okay, in my view. Okay, you can train yourself to do it. Anyone can. We might not become as successful as Ray Dalio, but I think it's all sound advice. Also, in terms of illusions, they are created by the median fundamental analysis when we're looking at it. In technical analysis, illusion is basically there and taught by a lot of people online, and the illusion is an illusion because it only works in hindsight. It doesn't work in the brutal world of trading. Just actually one point I think I forgot to mention in relation to technical analysis. I did mention keeping it very, very, very simple. And what you've got to focus on is great traders, okay, who use technical analysis. Let's say Edward Thorpe, Ed Sakota. They weren't too interested in, what had gone on, every little twist and turn, going back forever. They were always focused on price action right now and how it could move. So they're not predicting, they're just trading probabilities. We've done plenty of videos on this. I probably don't need to explain anymore. You can go and look them up. Right, I hope you enjoyed the video today. Thank you very much for watching me as usual. Take care and have a good day.